Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market. This is the E-mini S&P 500 futures contract, the front month. Today is Friday, January 30th, and last day of the trading month. So what we're looking at here, we're going to go back and look actually Friday, Thursday, Wednesday, Tuesday, and Monday. What happened to the steady drift higher into the Fed meeting? Well, let's go back to the prior Friday. As you can see, we had this bear trap coming into Friday, last Friday's session. We did have full bearishness on Thursday. We got the opening gap lower, but as you can see, we did have strong momentum divergences. We're looking at our proprietary indicators, suggested what we use to gauge the intraday dynamics. And we did see some bullish divergences, full bullishness there, but certainly a positive divergence there for the bulls. And what do we get? Nice drift higher, break above the trend, retest, and that's last Friday. Wasn't too impressive, but certainly was a bullish move from the early session open. And what do we have? We have Monday. Coming into Monday, we're still fully bullish. A little bit of a divergence there. Still fully bullish. Green, 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 green. Did run into some price technical issues. Broke back below the trend. Came back up. Chopped around. Did start to decelerate a little bit here in terms of bullishness. Actually dipped down into the bearish territory there on this move, but it was still holding through. We did have some divergences here, but still fully green, green, green. Slow drift higher on Tuesday was the case going into Wednesday's Fed meeting. And of course, we got the obligatory drift higher into the FOMC announcement and the resultant choppiness on this day. We actually didn't trade on this day, but we did have full green for the move, suggesting that we would get a close near the high of the day, which we did. So a nice move was the case on Wednesday for the bulls. However, on Thursday, completely different story. In fact, generally from a discretionary bias, we really don't put any faith in what the market's doing, any gauge forecasting the market until the following early session of the post-Fed day. So that would suggest around 10:30 Eastern time. Right there. So we had the market at 854.75. What was it doing? It was certainly lower. Certainly did not hold this move and wasn't about to fill the gap. In fact, the early session highs would hold around 860. We did come up, trailed into the underside of the now descent of a descending trend. And where do we have in our indicators? Full bearishness. Bearish, 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 and more importantly, accelerating bearishness in terms of this indicator. Full bearishness here, full bearish, bearish. Retest of the trend, as is always the case. Great selling opportunity when you have the underlying dynamics and you get the move lower, and a nice just trend lower on the session yesterday. For the market, we did get another retest of the trend on an intraday basis here this morning on Friday, and that's where we stand. We actually broke below the low of the prior session, coming down to around 8:30, trying to hold this low of Monday. For now, it's holding, but and we do have some divergences in terms of bearishness, but we do remain fully bearish. As you can see, the divergences aren't particularly impressive. Probably be a quiet close to the week or today. Certainly not expecting any kind of bullish snapback given the meager divergences. So now we're looking at the chart of the daily. This is a daily chart of the S&P 500 cash market. And where are we? Well, officially still, we are bullish. We did make that early switch over to bullishness right here on this bar after booking, I think, about 500 S&P points on the downside, maintaining our bearishness. But we just decided it was time that the market had bottomed. Certainly it has bottomed for the last 1, 2, 3.5 months. We haven't made that much progress on the downside. And we did switch our official market timing to bullish, where we remain today, even though we are underwater. 899 or 889 was the bullish call, 835, so about 55 to 65 points below. Not bad. 500 points on the downside, and then giving back 65 points. But more importantly, we do anticipate a very strong move, certainly to the 1,000 level, to 1,100 in the S&P, if not further. It's just a matter of getting it. So we did have our key 2-bar reversal buy set up here in terms of the cash market on the daily chart, but we are putting in another high, lower high here as our key measure of measures of trend around 885 now and 850 continue to put resistance on the market. So from every key measure that we look at, price technical, trend following, momentum, directional movement, horizontal levels, the market is certainly bearish. As you can see here, we have every measure of bearishness, but that would argue a state of neutrality given that our official market timing remains bullish and will do so as long as we hold above, we'll call it 790 to 800. If we get below 800, it'll certainly be meriting some caution. So that's where you have it on the daily chart. We're going to go ahead and actually look at the Dow. Someone mentioned yesterday about the RSI being at the lowest level in history in terms of the Dow on the monthly chart, standard 14 bar, 14 period setup. And so it's kind of interesting. Just thought they'd pass that along to you. Can't remember who it was, but certainly holding the low in the Dow of 7,500. This was the low in '02 and again in '03, so very important low there we're holding, and we've actually zoomed in on this data to show you, but we definitely need to get this going. It certainly looks like we're bottoming here, and should we get the move to close above 9,000, we definitely expect a move to quick move to essentially 10 or 11,000. But that's the Dow. We can actually zoom out now and look at the monthly. This was the nice little 87 blip. Was the case right there. As you can see, that the RSI certainly didn't fall below. Now, is this suggestive since we're lowest level in history? Here we're scrolling through the market on the monthly chart. Lowest level in history. What does that suggest? A great buying opportunity, one would argue, but certainly the other side of the token suggests that if we've not seen this, wow, maybe something is wrong. And certainly we've expected as the boomers retire and start pulling their money out, now they've lost half of it, that the market's going to go through about a 5 to 10 period 5 to 10 year consolidation period. Are we entering into that right now? Likely so, but we are going to get a nice snapback, and certainly this is a buying opportunity, great buying opportunity, even though no matter where the RSI is, if you just look from a price technical. So what we're going to look at now is we're going to go ahead and switch over to just trolling the internet, and we're alerted to some of these nice little comments about the dual day trader. This is a current client, up 300% in the last 6 weeks. See, he's been a client for about a year, 2 to 3 months. It doubles, suggesting about 3 to 400% a year. That's about on track. We target actually 1 to 200% per year on average, and goes on to say his friend, he has a few friends that he's referred. One's up 500% since March. Actually, that's his dual day trader. And here's about his friend's up 300% since June. And the last time his account doubled in a single day was when he was trading the MAP DTS. So that's an interesting thing. Here's a letter that we wrote to SR to get some of our portfolios up on the site, because obviously we'd be leading their leaderboard for the SR site, the Strategy Exchange. And so here you can see the MAP DT is up $155,000. This does not include slippage or commissions, almost 800% in the last year, as is the dual day trader DS, up 800%. We actually have a new dual day trader ES that is the same methodology, at least it will be, but trades the ES contract due to heavy demand. So there you see the gains, and there are the actual reports for the gains. 208,000, started with 52,742 a year ago. Dual day trader started with 40,660. Now it's 78,665 for a $38,000 gain, 155 for the MAP DT, a $20,000 portfolio there. And we definitely don't want to run out of time this time, so we're going to go ahead and wrap things up. If you guys have any questions, feel free to go to the website, chat with our support team, and we hope you guys are having a great trading week, and we'll see you next time.